United Arab Emirates is fighting against the Hawala transactions with some strict regulatory changes. Hawala is the sending of money through parallel channels, whereby the operators do so at much lower fees than what is there through official remittance channels. The Central Bank of the UAE has implemented strict new rules requiring all Hawala providers to obtain a Hawala Provider Certificate, effectively tightening control over informal money transfer systems. So, what it means for remittance senders in UAE? Tough regulations from the UAE's central bank have reshaped the scenario for Hawala transactions, particularly affecting those involving the Pakistani Rupee and Egyptian pound. Hawala, an informal money transfer system widely used in South Asia and the Middle East, allows individuals to transfer money without physical cash movement. However, its unregulated nature has raised concerns about potential misuse for money laundering and terrorist financing. Under the new rules, no individual or entity can conduct Hawala activities in the UAE unless they possess a Hawala Provider Certificate issued by the central bank. This requirement is part of an effort to ensure compliance with anti-money laundering laws and safeguard the financial system's integrity. The crackdown comes at a time when both the Pakistani Rupee and Egyptian pound have experienced relative stability, reducing reliance on informal channels as exchange rates between official and unofficial markets have narrowed. Many traditional Hawala providers are now facing operational challenges as they scramble to meet certification requirements. For currency exchange houses in the UAE and the wider Gulf, the Hawala transactions have historically been a major disruptor of their operations. The stringent measures have led to a decrease in transaction volumes. For many expatriates in the UAE sending money home, Hawala has been a convenient option due to its speed and lower costs compared to formal banking channels. But public awareness regarding the risks associated with using Hawala has increased. Regulatory authorities are actively promoting compliant financial services as safer alternatives. Initiatives like the Wage Protection System encourage low-income workers to open bank accounts, providing access to secure remittance options and salary-backed lending solutions. Mohammed Bitar, Deputy CEO of Al Ansari Financial Services, reportedly said that Hawala transactions will always be difficult to eliminate in full, but there is a drop in such flows. Failure to comply with the news regulations could lead to severe penalties for both providers and users alike. While these tough new rules aim to bring greater transparency and security to financial transactions in the UAE, they also pose significant challenges for those who rely on Hawala for cross-border remittances.